Hi guys, so good afternoon, good evening, wherever you're watching this video from. So this is Principles of Accounts GCE 2024, and we're going to go through the whole paper answering the questions. So let's jump into it straight. So as you can read, question 1 reads, this is question 1a. Match each of the following daybooks to its correct source document. So you have the sales daybook, you match it to its correct source document. So how you do this is, for the sales daybook, it's a duplicate invoice. So just like this, yeah, that's for the sales daybook, duplicate invoice. Then for the cash book, it's the check counter form. For the cash book, check counter form. Then for the purchases retains daybook, the source document is the original credit note. Original credit note. Then for the purchases journal, the source document is the original invoice. So these are just the daybooks and the source documents you're just matching to get the actual answer. Then from there we can proceed heading 1 to the other question, saying that write the actual number and name of the source documents in the blank spaces provided to match with the daybook. So how you're going to do this one is, we're just stating the source document, which is, I think this question is relating to this same one. So I think this is just one question, and which we've already answered. Yes, so all you just do is write the source documents that you've matched with to get your actual answer, and you're done. Then we head on to B. So B says show the journal entries for the following transaction: 2022 June 1st, bought computer on credit from Uptown IT Ltd for 12,000. June 19, the owner of the business took goods worth 360 without paying for them. June 13, P. Kondwani, a debtor, owned the business 500. It was decided to write off the bad. It was decided to write off the amount as a bad debt. So we are going to open up our data account. We just open up our book. So we'll have the date column, we'll have details, and then the title we'll put journal entries, then we'll have a folio, we'll have the debit side and the credit side, and then we start. So we have this transaction taking place in the year of 2022. The first transaction we have took place on June 1st, on January 1st. So this one, how we're going to actually solve it, it's a type of question that just wants to know your knowledge on the double entry system, which states that for every transaction you have a debit side and also a credit side. So for example, we've got our first one saying that on June 1st, bought computer on credit from Uptown IT Ltd for 12,000. So the computer itself will be put in the general entry computer, and the computer is an asset. The normal balance of asset is debit, so minimum put 12,000 here. Then we have Uptown ATD, where he got the computer from. Uptown IT Ltd, 12,000 as well, but to be credited. And just like that, you're done with your first transaction that took place. So you just close up this one, then you head on to the next one, which took place on June 9th. So for June 9th, we have the owner of the business took goods worth 360 without paying for them. So he took goods. So just him taking goods out of the business, just know that that is actually called drawings. And the drawings are the 400 expenses, so meaning this will actually be, the drawings will be debited. Then we have purchases. Purchases will be credited. So when you have a debit, just know that the other one will be credited. Then we have June 13. P. Conwani, a debtor, owned the business 500, to decided to write off amount as a bad debt. So the one that to be debited will actually always be the first one to be entered. So bad debt is an expense, which is 500. Then we have P. Conwani, 500. And just like that, you're done. That's how you prepare your journal entry. We head on to the next question, which is C. So let me just do this. So the question C actually reads, the following balances were taken from the books of T. Mulenga as at the end of the financial year on 28th February 2022. So we have these transactions right here. We have sales, we have purchases, loan, capital, premises, trade payable, bank overdraft, wages and salaries, marketing expenses, inventory on 1st March 2021, drawings, purchases, returns, and petty cash. Then required, prepare Team Linger's true balance at that date. So we jump straight into it. We're preparing the true balance now. Okay, so we first open up the account. Okay, so I'll have details. We'll have debit, and we'll have credit. So now what we're going to do, we're going to put Team Lenga, Team Lenga's true balance as at 28th February 2022. So now we start putting in the transaction. We have sales, sales is going at, and sales will be credited. This is going at 119,100. Then we have purchases is 72,000. Then we have loan from Zanaco, which is going at 80,000. Then we have capital, which is going at 155,000. We have premises going at 222,000. We have trade receivable going at 7,460. We have trade payable going at 6,700. We have bank overdraft is 4,160. Then we have wages and salaries going on to 22,300. Then we have inventory on 1st March 2021, which is 5,500. We have drawings, which are 10,000. We have purchases returns, which is 150. And we have petty cash, which is 450. Then we just add them up. Let's get my calculator. We'll start with the debit side. So we have 72,000 plus 222,000 plus 7,460 plus 22,300 plus 5,500 plus 10,000 plus 450. This will give us a total of 139,000 139,310. If you wait just a bit. So the quite right, we had 72,000, 222,000, 7,460, 22,300. There's actually something I missed here, which is right here, marketing expenses. Marketing expenses going at 25,400. Let me just add that plus 25,400, which will give me balance as 365,110. Then we'll do the same at the credit side. We add 119 100 plus 80,000 plus 155,000 plus 6,700 plus 4,160 plus 150, which is giving us 365,110, and that marks the end of our trial balance because it has balanced. We head on to question D. Question D actually reads, classify the following transaction into either capital or revenue receipts. So the first one, cost of repairing a building, which is, this is revenue receipt. Then the second one, we have cost of transportation of an imported delivery van. This is capital receipt, sorry. Then the third one, we have cost of road tax for an old motor vehicle. This is revenue receipt. Then cost of road tax for a new motor vehicle. This is capital receipt. Then the last one, interest paid on loan from the bank. This one is revenue receipt. Then we head on to number 2. Question 2. We have question 2A I, which actually reads, mention any two types of ledgers. So you can go for the sales ledger or the purchases ledger. If you want, you can go for the nominal ledger, any of the two, after the sales and the purchases ledger. Then we head on to the next one, which reads, define the following terms, nominal account. So nominal account, this is an account in which you find expenses, income, gains and losses of a business. So nominal account is an account in which we find expenses, income, gains and losses. Gains and losses of the business. Then we have the next question saying that define for us real account. So real account is an account that shows the business assets. Yeah, we can say it's an account that shows the assets of the business. Real account is an account that shows the assets of the business. And just like that, you're done with question 2. We're done to question 2b. So question 2b reads, B Mwanza is a customer of Peter and Sons warehouse. You are required to prepare B Mwanza's account as it would appear in Peter and Sons warehouse book for the month of January 2022. Pay attention to details. So what this means, this type of question on question 2, you're simply preparing what's known as a ledger. So you can either be given to prepare a sales ledger, a purchases ledger, or a nominal ledger. So the one we're actually preparing here is actually what's known as the sales ledger, also known as the debtors ledger. So we just open up our account. Yeah, so we'll have the debt column, details, the folio, debit, credit, and the title B Mwanza's account, or debtors ledger. Then we start. So these transactions took place in the year of 2022. Then we have the first transaction taking place on January 1st. So Big Mwanza on Peter and Sons warehouse 28,000. So this is the balance we start with. This is a balance. This is a balance brought down, which is 28,000. Then on June 5, there's another transaction taking place. Peter and Sons warehouse supplied to B Mwanza goods on credit worth 9,000, subjected to a 10% trade discount. So here, what's going to happen is that we'll have sales. They sold goods to B Mwanza, so that's why we're putting sales. And we have to find 10% of 90,000. So what you do is say 9,000 times 10 over 100. So 9,000 times 10 over 100, which is 900. Then what you do to get the figure that we'll put in the ledger, you will say 9,000 minus the 10% we found, which is 900. So 9,000 minus 900, which will give you 8,100. That's the sales, which you will take on the debit side as 8,100. Then we go on. The next transaction took place on June 12. So write it as June 12. June 12, what happened? B Mwanza paid Peter and Sons by check the amount owing on 1st January less 5% discount. So he's paid back the amount, but there's a discount. So we find the discount 28,000 times 5 over 100. The amount that he owed on January 1st, which is the 28,000. So you find first the discount of 28,000, which is going to give us 1,400. So you subtract 28,000 minus 1,400, 28,000 minus 1,400, which is 26,000. We'll call this as, you can either call it check or bank, but I'll go with bank. So when we subtract it, it's giving us 26,600, which this will be credited 26,600. Then even the discount is supposed to include it. So on the same June 12, you write also discount allowed. So the discount allowed is also credited as 1,400. Then we continue. June 18, we had a transaction taking place. On June 18, it says part of the goods supplied on 5th January worth 1,000 were returned to Peterson's warehouse. So we have return inwards. So what you do as well here, you see 1,000 goods costing 1,000 were returned, but that took place on January 1st. There was a discount on January 1st, which was 10,000. So times 10 over 100, 10,000. So 10,000 multiplied by 10 over 100, which will give you 100. Then you subtract 1,000 from 100, which should approximately give you 900. Yes, 900. So this return inwards is actually 900. Then from there you will go for January 30. You write balance carried down. I'll draw these two lines. And then you write 1st of January 2023. You write balance needs to be balance brought down. Then you add one, the biggest amount will be the one you put in these two lines. So we start the debit side. I'll just write it here when I find it, the debit side and the credit side. 28,000 plus 8,100, which is giving me at the debit side 36,100. Then at the credit side we have 26,600 plus 1,400 plus 900. This is giving me 28,900. So the biggest amount here is 36,000 obvious, which will come here, coming from the debit side, 36,100. But it's not adding up, because when you add this, we're getting this here. So what you simply do is get the same amount, 36,100, subtract 28,900 from it, which will give you the amount that will come here, 7,200. So that when you add all this, you get this same amount, bring it here, 7,200. Just like that, you close it up, you're done. Okay, we head on to C of question 2. So C of question 2 reads, state the mostly likely cause of depreciation for the following non-current assets. So on C1 I have got patents and leases. So this one, it's time, yeah. Then for the next one we have livestock. So for livestock, the cause of depreciation that can be caused to livestock can be, I can go for loss of weight. So the answer here is loss of weight. Loss of weight as a result of death. No, as a result of diseases. How about that? Then machinery. For machinery, it can be wear and tear, because as you use the machine, of course it's going to wear out. Then we head on to D. On January 1st, 2020, WG bought two machines from Barlow World Limited on credit at a cost of 40,000 each. It charges depreciation at the rate of 20% using straight line method. Its policy is to charge a full year's depreciation in the year of acquisition and not charge in the year of disposal. He bought another machine on 3rd March 2021 by cash worth 60,000. On 1st October 2021, he disposed of the first two machines at 60,000 by check. Prepare shares machinery account. So the first one is that on D now. We prepare first the machinery account. So we start the title, you actually call it just machinery account, or you can put WG under, and there's machinery account. So you have date, you have details, you have folio, you have debit, and you have credit. So what we start with, of course, is going to be the cost of the two machines that we bought on the 1st of January. So the transactions were taking place, we have in 2020. The first one was June 1st. We bought two machines from Barlow World. So write that as Barlow World. And each machine costed us 40,000. So two of them will cost us 80,000. So 80,000 will be debited. Then what we do next is go for January 30 and write balance. This will balance carried down. Just draw these two lines here, and then you bring 80,000 here and here. And since there's no figure here, for the balance carried down, you have 80,000, which will come, which you also write here as 2021 June 1st. You write balance. Sorry, you write balance. This will balance brought down as 80,000. Then from there, on January 1st, we also sold one of the machine. We bought another machine. Yes, we bought another machine. He bought another machine on March. So we've got March 3rd. We bought another machine, so we put cash as at we bought it at 60,000. And then again, we have a disposal on October 1st. We had a disposal, and the disposal was 80,000. Disposal of one of the machines. And then what you do next is go now for December. 31st December 2021. Read balance. And just draw these two lines. And then you add the biggest amount, of course. It's going to be 140,000. 140,000. Then you subtract 80,000 from 140,000, which is going to give you 60,000. And just like that, that's how you prepare the machinery account. You're done. So if you just realize what was happening in the machinery account, majority of the amount where they're coming from is just the cost. Here we have got each machine costing 40,000, meaning just let's say 40,000 times 2 to get this 80,000 right here, which you also bring down here. And then for this 60,000, we just got it because it's in this 2021 when he purchased a new machine by cash, which was worth 60,000, which is this one here. The disposal he disposed of the first two machines is actually the cost of the two machines when you multiply them, the 80,000, which is the one that just come here. So we are doing to the next one, which is machinery disposal account. So have the credit side, have the debit side, portfolio, have also the debt. Now start, we just write W Chiandas disposal account. Then write date, then details, folio, debit, credit. Then we start. Our first purchase transaction are taking place in 2021 for the disposal account in the year which you disposed the account. So October 31st, we have machinery. The two machinery costed 80,000, which he disposed of. Then we have depreciation. Depreciation is going at 16,000. Then we have cash. We got this machine at 60,000. We sold them at 60,000. Then what we just do is write balance. So draw these two lines. And we add up which amount will have the biggest. Of course, it's going to be the 80,000. Then we subtract 80,000, we subtract 16,000 and 60,000 from 80,000, which is going to give us 4,000. And just like that, you're done with your disposal account. Next, we've got question 3. So question 3 has got question 3 has got 3A and 3B. So for us in this video, we're going to actually be focusing more on 3B. So we start from 3B. So 3B actually reads Cholwe had the following balances for December 2022. So these were the balances he had. Then required prepare the sales ledger control account, only showing the balances to carry forward to the following month. So this is how you're actually going to prepare this account. Start by opening up the table. So you have the debit side and the credit side in there, and the debit side. Then you have the folio column and the date column. Then we'll start, we'll have date, have details, folio, we have debit, and then we'll have credit. Then the title, Mcholwe sales ledger. Then we start. This took place in 2022. We have the first transactions taking place in 2022. Then we have they're taking place in December, on December 1st, which is balance. The balances, we have what's known as debtors ledger control balance. So the normal balance for the sales ledger is actually debit. So this is why the 40,250 come at the debit side. Then we also have debtors ledger control account balance. But the goodness of this is that the balances were indicated which one will go to the credit and debit side. So you have this one, which is right here at the debit side. Then you have 3,845 will be credited. These are both balances for the sales ledger. This one is for the purchases ledger, the one credit. Then we have other transaction taking place on December 31st. We have sales. We have the sales going at 854,239. Then we have purchases, no, that goes in the purchases ledger, returns inwards, yes. So December 31st, return inwards. So return inwards is going at this is 44,271. Then we have December 31st. We have receipts from customers. Receipts from customers. The receipts from customers are going at this is 675,843. Then December 31st, we have discount received and allowed. The one that's entered in the sales ledger is discount allowed. Discount allowed is going at this is 20,275. Then December 31st, we have bad debts written off. Bad debts written off. Bad debts written off is going at 13,173. Then we have a set off. The set off is going at this is 7,457. Then December 31st, we have refund. Refund to customers invoice. Refund on customers invoice. So I forgot to mention that this was actually balance brought down. So the refund on customers invoice is going at 3,244. So from there, December 31st, we'll have balance carried down. We draw these two lines. Then again, you have another, and this will be 1st of January 2023. You have balance brought down, and then you add. So I'll just put them here: debit, credit. So we start with the debit side. We have 40,000, 402, yeah, 40,250 plus 854,239. This is giving us a total of, on the debit side we have 89,000 40 250 85 42, sorry, 40,250 plus 85 42 39. This will give us a total of, sorry, there's actually a figure I've actually forgotten in the transaction, which is the debtors creditors balance. This one was supposed to happen. The debtors creditors balance brought down, and they brought down here. It's supposed to come here 2,119. Then you also bring it here 2,119. That's the only figure I forgot to add. Then from our total, we say plus 2,119, which would give us 896 608. Then at our credit side, we have 38 45 plus 44 271 plus 67 58 43 plus 20 27 5 plus 131 73 plus 7457 plus 3244. This will give me a total of 768108. Then we check which one's bigger. Of course, it's going to be this one, which will come in here, 896608. 896608. Then you subtract this amount from this. So 896608 minus 768108, which will give you a total of 12,800. 12,800 also come here. And just like that, you're done with your sales ledger. And then we head on to what's known as the ratios. So for the ratios, we have the results of Zamcab trading for the year ended 31st December 2022 were as follows. You've got inventory at 1st January 2022, inventory at 31st December 2022, then sales and purchases. Then at first we are the first one, calculate the following item for Zamcon, cost of goods. So the first one, we're going to use this formula to find our cost of goods. Purchases is equals to cost of goods sold plus closing stock minus opening stock, opening inventory, sorry, opening inventory. So what was my purchases in the question? My purchases is 250,000. The cost of goods, I don't know, I'll put X, plus my closing inventory, which is 16,000, minus my opening inventory, which is 6,000. Then this would be 250,000. And then this, when I do my maths, this will give me 10,000 plus 10,000. Then we'll just say X is equals to 250,000. Then this comes to the other side, minus 10,000. X will be equivalent to, when we do our math, this will give us a total of 240,000. So the cost of goods sold, is 240,000. Then we head on to B. This was A. We head on to B, which says average stock. So average stock, for average stock, use this formula: opening stock, opening inventory, plus closing inventory over 2. So average average stock is going to be equal to our opening inventory is 6,000, plus the closing inventory, which is 16,000, over 2. This will give us our average stock to be, 11,000. Then we head on to gross profit. So in this question, how you're going to find gross profit is using this formula: cost of goods sold is going to be equals to sales minus gross profit. So our cost of goods, we found it as 240,000. Our sales in the question is 300,000, minus the gross profit, which we don't know we're looking for. So what you do here is say X is equals to negative X, negative and the negative, is equals to 240,000 minus this, when this goes to the other side, 300,000. So negative X is going to be equals to, when you subtract that, this should give you an approximately of negative 60,000. Then you say over negative, you cancel the negatives, then X will be equals to 60,000. That's your cost of goods. No, sorry, that's your gross profit. The gross profit is 60,000. Then the next one is gross profit margin. So gross profit margin is simply just say gross profit makeup. Sorry. So how you find this one? Makeup. You use this formula: gross profit over cost of goods. Gross profit over cost of goods times 100%. So our gross profit is one we found, which is 60,000, over the cost of goods, which is 240,000, times 100%, this will give you 25%. Then we head on to the next one, which is margin. So margin, the formula we use to find margin is gross profit over sales. So it's a gross profit over sales. So how much was our gross profit? Our gross profit was 60,000. Our sales is 300,000 times 100%. Sorry. So when you do your multiplication there, you'll find that this will give you 25%. Then we head on to the last one, which is F. This was E. F is saying the rate of stock turnover. So rate of stock turnover, you find this one is saying cost of goods over average stock. Cost of goods over average stock. So the cost of goods was, we found our cost of goods as 240,000 over our average stock was 11,000, and this will give you, when you divide this will give you 21.8 times. You can put it as a whole number as just saying 22 times. Any of these can be a good answer. Thank you very much for watching, guys. For more videos like this, please like and subscribe to the channel to get more videos on principles of accounts. Thank you very much for watching.